Milind from NSE's product
Milind,
team. And
Milind.
yeah,
Uh,
yeah, sorry.
okay. Very good evening, participants. Welcome to today's open house. Today's open house is on bullion offerings by NSE. Today we chose this particular topic because, as you know, we keep on doing open house sessions on diverse topic, and today's time, definitely people would be interested to know about various bullion offerings that NSE offers through different products and all. Now, to explain today's session, I have with me my colleague Milind Pandav, who is from Products Department, and I, Jwalan Gandhi. Welcome all of you again. Now, before we just start with today's session, I would like to request each and every participants that in case you have any questions during the session related to today's topic, which is the bullion offerings, you can use the Q&A tab to post your queries, and definitely we'll be able to address those relevant questions at end of the explanation. During this session, we'll be covering and trying to explain different offerings that we are having. So please give your due attention so that it will be easier for us to convey what we want to explain and share with you today. Definitely, there is one new offering that during this session we are going to share with you. So again, please pay attention. Without further ado, again, I welcome Milind Panda. Milind, before we understand the offerings, let's try to
Mhm.
provide bullion market overview to participants, especially with respect to demand, price trends, participation, and how India fares for bullion offerings.
Thank you, Jwalan. So, good question. We had seen a lot of traction in the bullion market recently. So, I'll just give you the current bullion market scenario. So, as we see in the last year, we have seen the global demand has crossed around 500 tons of gold, which is the highest level recorded historically. So this growth was primarily driven by strong investment inflows through ETFs, bars, and coins, along with the accumulation of gold and silver, which was done by the central bank like India, Turkey, China. Again, the strong price momentum of gold prices have reached multiple highs. So we have seen in last financial year the gold has rise from around 80% due to inflation concerns, geopolitical risk like war which is happening between Israel and Iran, and the earlier war which was happening between the Russia and Ukraine. So these are the geopolitical risks because of which the gold prices, as gold has been seen as a safe haven asset. So due to this geopolitical risk along with microeconomic uncertainty, we have seen the gold prices moving at around 5,500 levels per ounce in this couple of months' time. And there has been a growing investment participant as well. So we have seen in India, we have imported around 800 tons of gold in the last financial year, and every year the import of gold has seen a 5% increase in year on year. Even if the prices are increasing, and we have seen the prices increased, the demand for jewelry in India has gone down, but the demand for ETFs and digital gold, gold coins have been increased substantially. So this is what
So basically,
the
what you want to say is people are moving to alternate investments for gold and silver, probably.
absolutely, absolutely. So we see a lot of traction in ETFs. I'll take that. If anyone wants to know about ETF, I'll take it as needed. But a lot of investment has been happening in ETFs and especially gold coins and gold bars.
Sure. Milind, so various factors must be influencing bullion ecosystem, I believe. If you can give brief explanation on it as well before going to the products.
Sure. I'll give a brief influence that are influencing the current bullion market. So as I said earlier, the geopolitical tensions, the ongoing conflicts between countries are driving safe and buying, pushing gold prices higher. Global economic uncertainty. So we have seen in past couple of years, US had been in inflation, higher inflation and recession fear, which boosted the gold prices or the silver prices higher. higher. Further, we have seen interest rate decrease. So as we see that in economics, if the interest rates are reduced, people try to find other ways to invest their money. So gold has been a very prominent asset class where the investment has happened, because of which the gold prices have moved up. Further, as I mentioned, central banks accumulation, we have seen in last couple of years, China, India, Turkey has accumulated, their central banks have accumulated multiple tons of gold, because of which one of the factors is the gold prices are moving up. And one of the factors that depends on the Indian festive season. So we have Indian festive seasons like Diwali, we have Indian festive season like wedding seasons, and we have one of the season coming up next month as Akshat Tritiya. So these are the seasons wherein the jewelry demand or the gold coins demand are very high, due to which the gold prices have we can see the gold price have significantly moved up.
So, in such kind of festive seasons, maybe sensitivity towards price may be seen by the market participants.
Absolutely, absolutely.
Great. Now, moving ahead, can we just brief market participants about the present bullion offerings that are available at NSE? Just a
Yeah.
brief to start with.
Yeah, sure, sure, sure. So we have multiple avenues of investing in gold and silver on NSE platform. So NSE offers ETF in their capital market segment. Then we have derivatives, that is bullion derivatives. Then we have one of an upcoming segment which the government of India has already approved, and we have a SEBI master circular that is published, which is electronic gold receipts. So under ETFs, we have gold and silver ETFs. In the derivatives, we have future and options on gold and silver. And as I mentioned earlier, EGR will be a completely new segment which will be launched after the approval.
I understand. So now, as you have right now mentioned over screen that gold and silver ETFs are one of the avenues, so they must be available for trading since quite a time. Can you elaborate on the participation trends and also if we can brief on the advantages of these ETFs which we offer?
Absolutely, absolutely. I'll take that. So I'll just explain what are ETF, and then I'll give you a brief idea about what is the demand in ETF and what is the traction which has happened in say last 5 years time on ETF on the gold side as well as on silver side. So I'll just explain what are ETFs. So ETFs are an investment fund that is holds a multiple underlying assets that can be traded on an exchange like an individual stock. So in case of bullion ETF, we don't have a multiple underlying asset, but we have a individual asset like gold and silver. So we have gold ETF and silver ETF. So I'll just give you a brief background on this. So what the fund houses do? The fund houses they purchase gold from the market, and they keep this gold as an underlying. Underlying, they create units which are sold on the exchange platform. So this is what the ETFs are for bullion. So that goes for both gold and silver. So I'll just run through the advantages of ETF. So what are the advantages? So as it is listed on the exchange and especially on NSE, so it's a very good and traded product on NSE. So the liquidity is quite high on the exchange. Efficient access to bullion investment. So if you see, we have multiple segments in our on our platform. We have equity, we have currency, we have debt segment. So ETF is a kind of diversified product which the market participants can use to diversify their portfolio. Further, we have transparent price discovery. So as we see that the market participants are very high in the ETF side, so there is a good amount of liquidity, which because of which there is a good price discovery in the market. Further, we have good liquidity and trading flexibility on our platform. Further, I'll go with the historical trend of ETF. So, as I mentioned earlier, we have multiple segments on our platform. We have equity, we have debt, we have gold and silver. So, based on gold and silver ETFs and equity debt ETFs, see if you can see from March 2017 to March 2025, we have seen the number of ETFs growing from 63 to 311 ETFs fund different funds, and for now NSE is offering 25 different gold ETFs and 17 different gold silver ETFs that are offered as of December 2025 on our platform. Further, we see the average daily turnover. So, as you can see in the financial year 2024, the total average daily turnover in crores was 62 crores. Compared to that, in FY26 till December 2025, we have seen average daily turnover in crores in bullion ETF, which consists of gold and silver, is 1291. So, we have seen a substantial increase in the volume and turnover of ETFs from FY24 to FY26 till December 2025. So we still have
And
uh,
especially for the bullion ETF, as we have shown in the graph, right?
absolutely, absolutely. So this is a very good segment, or there is a very good product wherein the market participants will have a good diversification of this of their portfolio in the bullion market.
Great. And as ETFs are particularly listed under CM segment only, so participants need not do anything else. If they are
Absolutely, yes.
participating in the CM segment, they'll be able to participate with ETF also, right?
Yes, yes, yes.
Great. Now, this was about ETF. Moving to bullion derivatives, definitely we have told that NSE also has bullion derivative contracts available. What are the key factors to consider about bullion derivatives as possible avenue for market participants?
So I'll just explain that to you. So I'll just explain first what are Bullion derivatives. So as you must be knowing that derivative refer to financial instruments that are derived from the underlying assets. So in case of Bullion derivatives and futures and options, these are the contracts whose underlying is either gold or silver, depending on the contract which you are trading. And bullion derivatives also allow investor to mitigate the risk and hedge on the price movement of bullion without physically owning the metal. So, why bullion derivatives? So, I'll just give you a brief idea about the Indian market. So, Indian market is completely a import-driven market. We import gold. We don't manufacture gold, and we import roughly 800 tons of gold every year. So that is a very big amount of gold that which we are importing every year. So these importers and out of this 800 tons, maybe probably some 5 to 10% of gold must be getting exported. So we have importers who are importing physical gold, converting that into jewelry, and out of that jewelry, roughly around 5 to 10% must be getting exported. So there is a very huge price risk which has to be managed. So these bullion derivatives are a very good product, are a very good product for offering for the market participants, especially for importers and exporters, jewelers you can mention, or you can mention bullion dealers to hedge their risk against the price movement. Further, we have efficient price discovery. So as it's traded on the exchange, we have multiple participants who are participating on the exchange platform. So we can have a very efficient price discovery of the bullion products which we offer on a platform. Further, we have a trading objective. So, as I mentioned, in case of ETF, which are traded, a gold ETF and silver ETF, a kind of a different portfolio or investment in in your portfolio. So, again, the bullion derivatives is a range of products and strategies to meet their trading objectives, such as diversification of portfolio and capturing the commodity market trends. Further, price setting economy for global commodities. So as you have seen that gold and silver are global commodity, and the price are driven by the global factors. But as again I mentioned that we are a very big importer of gold and silver. So as trading on the platform of NSE, we can be a price setting model for the global commodity like gold and silver.
Great. Now, NSE, I assume, must be having a various products bouquet for futures and options. So, can we just give a glimpse to participants that what are the products for futures and options with Bullion?
A- Absolutely, absolutely. So we have a lot of product offering in the bullion segment. So we have 12 different types of bullion derivatives that are traded on NSE Commodity Derivatives platform. So we have futures, we have options. So we in futures we have gold 1 kg futures. Gold mini futures are of 100 grams. We have gold guinea futures of 8 grams. We have gold 1 gram future. Of late, on 16th of this month, we are launching gold 10-gram futures. So I mean, we are very excited about the launch. And further, we have silver futures of 30 kgs. We have silver mini futures of 5 kgs, and we have silver micro futures of 1 kg. And further, we have gold and gold mini options and silver mini options. So these are the 12 different type of bullion derivative products which are offering on our NSE platform.
Great. So you just mentioned and told our participants that we are going to launch from 16th of March, which
Yeah,
is just 2 days from now, the gold 10-gram futures as one of our additional offering for bullion derivatives. Definitely, it is a new product participants that is being launched by NSE. So, Milind, can you tell our participants about the possible edge that this new product may serve to the market?
absolutely. I'm very glad and I would be very happy to share the details of our 10 gram futures contract, which we are launching on 16th of this month. So, as I already mentioned, what are futures contracts? So, we have multiple future contracts for gold, which are traded on our platform. But what is unique about this gold 10 gram future is the contract size of the future contract is small. So, it's easy for the participant to hedge their price risk on the smaller contract size, which can help in mitigating their risk by managing price volatility without using a large capital exposure. So if you see a 100 gram gold mini contract, or if you see a 1 kg contract wherein the margin which is required is quite high, and as you see the prices have moved substantially higher, than the amount of margin which we require for hedging your price risk at 1 kg or at 100 grams is higher. So this gold 10 gram futures will act as an effective hedging tool for jewelers, importers, exporters, and traders to lock in their prices at a very small capital exposure. And because it's a very small contract, or it's a small contract, it can enable wider participation among our larger gold contracts. And again, as you see that it can act as a portfolio diversification, because you can invest in gold and you can take physical delivery of the gold 10 grams coin.
Okay. Any further insights that you have on why participants should track and consider gold 10-gram futures?
Yeah. So I'll answer that question. So as I mentioned earlier, India remains one of the largest global consumer of gold, and year on year we have seen a substantial increase in the consumption of gold, both in volume and value. So I mentioned earlier, out of the total imports which we are doing, initially the jewelry part was very high of the imports, and the gold coins or the digital form of gold or ETFs were at a lower side. But now of late we have seen the investment in jewelry has come down, but the investment in ETFs and gold coins and other digital products of gold has been seen a substantial increase. So that is indicating a shift toward a gold as a financial asset, instead of keeping jewelry into your home and paying jewelry charges, which are roughly around 5 to 10% on the value of gold. So using this gold 10 gram futures, you can have a gold coin in your bank account, or in your bank locker, or your own locker. Further, high import dependency increases exposure of global price volatilities, and as I mentioned earlier as well, price swings, and you can hedge your position on this gold 10 gram futures. Growing retail participation demands smaller accessible contract size, because there is a growing retail participation, and retail participant don't go for higher or larger amount of gold. So this gold 10 grams is specially designed for retail participants who are willing to invest in gold at a smaller level. So why gold 10 gram futures? I think I have answered your question, and I think the audience would be very keen for this launch, and and I can see a good traction from the audience on our platform for this contract.
Correct. Now, for bullion offerings, participation perspectives may be different for different participants like dealers, jewelers, importer, exporters, and refiners. So, how gold 10-gram futures can be important to them respectively? If you can just share.
Absolutely. So import of gold, that doesn't mean it's for a particular investor. So it varies from jeweler to importer and exporters to refiner and bullion dealer. So everyone has something to do with the import and export of gold. So if you talk about jeweler, so as I said, the gold prices have substantially increased. The demand of jewelry has decreased. So the jewelers have started started buying small amount of gold to convert that gold into jewelry. So if you see a jeweler who is taking say 10 grams or 20 grams of gold, and he has to convert that gold into jewelry and sell it in the market. So generally a jeweler takes 15 days time or 30 days time to convert that physical gold into jewelry. So for that, if I am a jeweler and I have purchased the gold today on 1st of April and I'm going to sell the jewelry on 30th of April, in that case I have a price risk because I have to pay to my supplier the amount of gold or the amount of money which I have taken on the first day. So this contract, especially 10 grams contract, will help him to hedge his risk, and once he convert that gold into jewelry and sell it in the market, he can unwind his position. So they can lock in future purchase price and protect their margins when the gold is very volatile. And these days gold has been very volatile. For importer and exporters, again, they can lock their gold prices before buying or exporting, avoid by avoiding global prices swings. Sorry. Then they can reduce their risk from changes in international currency or gold rates. So you see the gold rates and international currency keeps on fluctuating. So they can hedge their position, and then they can reduce their risk. And this small size contracts are they're typically they fit their to their shipping and trade requirements. And then you come to refiners and bullion dealers. So bullion dealers and refiners usually import gold, and they sell it in the market in pieces. So if I am a refiner or a bullion dealer, I buy 100 grams of gold, but my customers are like they buy 10 grams of gold each. So I have 10 different customers. So for me, if I am buying 100 grams, so I can hedge 100 grams, but I sell first 10 gram and then sell 20 grams. So in that case, this product is a very good product wherein I can reduce the price risk between purchase and sale. It will support me better for me to give better quotes to jewelers and customers, and it can also improve cash flowing planning in volatile markets.
So I believe commingling participation from all kind of these participants may further strengthen the ecosystem of Bullion product, it seems, right? Especially the 10 gram
Yes,
futures
yes,
that
yes,
we are about to launch. Great.
yes,
Now,
yes,
before
yes.
we further proceed, I again request participants to just post their relevant questions under the Q&A tab. At the end of our explanation, we'll be taking those questions one by one. Moving ahead, definitely it is a new product, Milind, right? We just mentioned to participants that
Mhm,
so
mhm.
participants might be interested to know about the key aspects of contract specifications being a new product. So if you can just take us through that.
Yes, absolutely. I'll be more than happy to share the details of the contract specs which we are planning to launch on 16th of March. So these are the contract specs. So the underlying, as I mentioned earlier, it's a derivative product. So the underlying will be gold. The product would be the gold futures. And if you want to invest or trade in this product, the symbol of it would be gold 10G. So whenever you want to trade on a platform on the gold 10 grams future contract, the symbol you can use is gold 10G. Further, the contract listing of this contract will be the first of every month, and there will be 12 contracts. So it will be a monthly contract. The listing of the contract will be first of month, and the last day of the contract will be the last day of the month. So suppose if I am launching a contract which is starting on 1st of April, its last day of the contract would be 30th of April. Depending 30th of April is a working day. So if suppose 30th of April is a non-working day, it falls on Saturday or a Sunday, or it is falling on some Monday, then the expiry of the contract will be the preceding day of the last working day. So if 30th is a Saturday, it's a non-working day, then 29th of April will be the expiry of the contract. Further, like other contracts, the trading period the would be from Monday to Friday. The trading session would start at 9 in the morning, and it will run till 11:30 in the evening or 11:55 in the evening based on US daylight saving. Trading unit, quotation unit, and delivery unit for this contract will be same. So trading unit, if you are trading on that contract, the one trading unit would be of 10 grams. The quotation, the price which you'll see on the platform will be of 10 grams. So if you're trading 1 unit of gold, the price you will see as 1,60,000. And if the delivery is assigned to you, the delivery unit will be of 10 grams. It's a ex Ahmedabad contract, so whatever delivery is assigned to you or you have to give the delivery, the delivery will happen through Ahmedabad. The tick size of this contract will be 1 rupee. So whenever there is a price movement, minimum price movement will be of tick size. So suppose the price of gold today is 1,50,000 and it's going up by a rupee. It will the next tick would be 1,50,000 1 rupee. So these are the
Okay,
basic.
and
Sorry.
how about the settlement particulars, delivery mechanism, and applicable margins for this contract?
So I've run through the contract specification. I'll come to the margin and settlement of the contract. It's identical to the other contracts which we are having. So settlement of the contract, all on the expiry of the contract, all the open position shall be marked for delivery, and the delivery pane will happen on T+1 basis by 11 a.m. except Saturday, Sundays, and trading holidays. The final settlement price, as we see that we do spot polling, and the prices are done through Ahmedabad spot polling prices of 9 and 5 purity. So we'll take the average of it, and the price spot polling price will be converted into 999 purity, as this contract is of 999 purity. So the 9 and 5 purity rates will be converted into 999 purity, and that will be the final settlement price of the contract. Staggered delivery period is the last 3 days, 3 working days of the contract. So suppose the contract is trading on is expiring on 30th of April, or a 30th of any month, or 31st of any month, the last 3 working days. So in case of April, 28th, 29th, and 30th would be the staggered delivery period. As I mentioned earlier, the delivery logic will be compulsory. So initial margin depend on the volatility. It will be 6% or higher. Special margin, if the volatility rises, additional margins will be charged to the person who is having an outstanding position. Delivery period margin is 3% plus 5 day 99% VR of the spot price volatility, or 20%, whichever is higher. So this is the basic settlement margin and settlement provision that we have for gold 10 grams futures.
Okay, and any possible benefits to trade gold 10-gram futures at NSE?
Absolutely, we have a lot of benefits to trade gold and gram future on NSE. So we have a lesser transaction cost. We have tie-up with refineries. So we have done tie-up with a couple of refineries already, and they are willing to sell their gold coins on our contracts. So these refinery might give us very good rates compared to what we can see in the market. So they can act as a seller on our platform. Further, we have one of the logistic partner which are working on, and they have somewhere around 437 regions across India where they can cover the physical delivery of this gold and gram coin. Then we have collateral fungibility. Further, we have one inventory management system that will be provided to our clearing members, trading members at client and client level. So the trading member, they can extend this facility to their clients, and trading member along with the client can see their open position, what open position they have on our platform, what a delivery has been assigned during the staggered delivery period, or if they want to give a delivery intention, they can give it through the IMS inventory management system.
Okay, you just mentioned about lesser transaction cost as a benefit. Can we give a quick overview on costing example so that people are clear about the
Abs-
benefit?
Absolutely, this is one of the very best benefit of trading on NSE platforms. So I'll just run through it. So this is just a small cost sheet and comparison between trading on NSE and the other exchange. I have made it. As you can see, if today the gold price is 1,62,000 rupees, the total turnover of buy and sell will be 3,24,000 rupees. Stamp duty is flat for both the exchanges, which is 0.02%. That comes to 3.24 rupees. Further, CTT is 0.01%, which is same for both the exchanges. So the total value of CTT is 16.20 rupees. Exchange turnover charges. So in this case, as you can see that NSE charges 0.1 rupee per lakh on turnover, but the other exchange is charging 2.1 rupee per lakh on turnover. So total exchange turnover charges that investor can trade would be charged at 0.32 rupees compared to the other exchange, which is 6.80 rupees. So as you can see at the end, the total expenses an investor or a trader or a hedger can has to spend is rupees 20.20 rupees on our platform, but the other exchange is charging 27.85 rupees, which is which is about to roughly 8 rupees higher than what he will be charged on NSE, that is around 30-35% which the other exchange is charging to an investor. So this is the one of the key benefits of trading a gold 10-gram future on NSE platform.
Right. Now, why NSE can be a preferred choice for bullion derivatives overall?
So as I mentioned earlier, we have multiple different kind of segments on our platform. So as everyone knows that NSE is number one derivative exchange in the world, not in India, but in the world's number one derivative exchange. As I mentioned earlier, we have very economical transaction charges. We have fungibility on collaterals across segments. We have robust, safe, and resilient technology platform. Our technology platform is absolutely safe. Then we have multiple assets that can be traded under one roof, and further we have NSC Clearing Limited for settlement and guarantee. So there will be no issue of settlements in our contracts, which will be traded on our platform.
Okay, so fungibility of collateral, which you just mentioned, is surely a critical facet and supporting advantage. So please explain it a bit more.
Yeah, sure. So as I mentioned earlier, it is one of the key benefits trading on NSE is fungibility across the NSE segment. So as you all know that the other exchange, commodity exchange, doesn't have a F&O in equity. So NSE has that. So you can enjoy the collateral fungibility across segment in NSE. So from morning as you can see, as you all know that the morning 9 a.m. the equity starts, wherein you can trade equity from 9 to 3:30. So if you have any collateral and which you are using in equity F&O segment, you can use that from 9 to 3:30, and any unutilized collateral is available post 3:30 as the equity market closes. You can move that collateral to the NSE commodities segment, wherein you can trade NSE commodities F&O from 3:30 to 11:30, and for the next day, if whatever collateral, unutilized collateral is available from the NSE commodity F&O segment, you can move again that to the NSE cash segment in the morning, and you can use that from 9 to 9:30. So that cycle moves on, and whatever collateral you have, unutilized collateral, that you can move it to multiple segments and use it. So it's an added advantage to trade on NSE.
Certainly, certainly. Now, earlier we mentioned EGRs as one of the offerings which many participants may not be aware about. So, if you
Mhm.
can brief on what this new segment means and what benefits it may offer to participants.
Absolutely. So EGR generally are electronic gold receipts, and the government of India in 2021 wanted to have a spot exchange. So as I mentioned earlier, on the derivative part, the contracts which were there were the derivatives contracts, wherein we had the futures contract with multiple expiries. So Indian government wanted to have a spot exchange in India, so they guided SEBI to have issue one of the circulars on EGR, and in the year 2022, SEBI had come up with a master circular on EGR, which is electronic gold receipts. So what are electronic gold receipts? So electronic gold receipts are receipts which can be traded on the exchange like NSE, and this can be traded as a security like stocks, but the underlying would be physical gold. And you can trade those receipts on the NSE platform. And if you want to take the delivery of gold, you can surrender those receipts which are owned by you, and you can convert that receipt into physical gold. So I'll just run through the benefits of EGR. So it will be a unified pricing mechanism and easily tradable on NSE platform. It is more convenient than physical gold. So as I mentioned earlier, you can convert your physical gold into electronic gold receipt. You can trade on our platform, and you can keep those receipts into your demat account without holding a physical gold, provide liquidity and assured gold quality. Sorry. So as you are trading on NSE platform, it will have huge liquidity. So your entry exit will be quite smooth, and whatever gold that you are going to deposit into the approved vaults by SEBI, that gold will be checked by the vault manager before creating an EGR. So suppose you have a 10 grams coin which you want to deposit and create that into an EGR. So whenever you go to the vault manager will check the purity of the gold. They'll check the quantity of the gold, and if he's satisfied, he'll issue a EGR receipt. So it has a assured gold quality. Settlement guarantee for investors. So we have NCL as our settlement team. So settlement guarantee for the investor will be done by NCL. Again, it's one of the bullion what do you call it, bullion asset. So it will help you to diversify your investment portfolio. It can be held in demat account like stocks, so you don't have to hold physical stocks in your hand or in your bank lockers or at home. You can hold this like demat account in your stocks. And again, we'll be having multiple. I mean, we have not launched this product but segment, but we are going to launch this segment very soon. So we'll be having multiple denomination of EGR products that we'll be having.
Great. Now, being a new segment, we should also explain on how the transaction will flow for the EGR product. I mean, if we can just take it.
Yeah, yeah. So as I mentioned earlier, EGR is a physical gold that is converted into demat form, and then from demat form it will be converted into the physical form. So there are three tranches of EGR. The first is creation of EGR, second is trading of EGR, and third is converting of EGR into physical gold. So how does it work? So I'll just explain you in short thing. So if I have gold with me, which is 995 purity, and it's of 10 gram. So what I'll do, I'll go to the vault manager who is approved by SEBI. Under the guidelines of SEBI, the vault manager will check the gold. He'll After checking the gold, he'll check the quality of the gold. He'll check the quantity of the gold, and he sees that the gold is of the nature which is accepted by the vault manager. The vault manager will accept the gold and inform the depository participant, which is NSDL or CDSL, that they have accepted the gold and they have issued a EGR receipt to one of the customers who has deposited the gold. Once the depository get the information about the gold being deposited in the vault, they'll create one EGR receipt, and they'll assign one ISIN to that EGR, and then that EGR receipt will be credited to your demat account. So once the demat EGR is credited into your demat account, it will be a kind of security which you can trade on the exchange platform. So you can trade that EGR on NSE platform. You can do buy sell of the EGR platform until unless the buyer does not convert that EGR or that demat form of gold into physical gold. And then the final step is converting the demat form of gold or the EGR, electronic gold receipt, into physical gold. So I'm the buyer of the EGR. I have the receipt with me, and I want to convert that receipt into physical gold. So I am the beneficial owner. I'll request the depository that I need to convert this receipt into physical gold. So the depository will debit my demat account by that the quantity of EGR I'm holding, and then the depository will inform the vault manager that okay, this amount of gold has been extinguished, and you can hand over the physical gold to the beneficial owner of the EGR, and the beneficial owner of the EGR can collect the gold which he was having in the demat form, can convert into physical form by taking the delivery from the vault manager.
Understood.
So
Understood.
this is the basic.
Right.
So
So
this was the basic
participants,
transaction
I
flow for
guess
EGR.
this was the products and offerings that we wanted to cover under bullion offerings by NSE. We still await queries from all of you in case you are having any. So we'll be waiting for a couple of minutes by the time you just type in your question. So by that time, I again request Milind if you can just take participants through the contract specifications of gold 10 gram futures, which is the new product that we are going to launch, so that they have a couple of minutes to type in the queries, if any.
Sure, sure. So I'll just run through the contract specs of our gold 10 gram futures that we are launching on 16th of March this month. So the product parameters would be gold 10 gram futures. The underlying will be gold. As I mentioned earlier, it's a future contract. So instrument type will be futures contract, FU2BLN. The product will be gold futures. Anyone wants to trade in this product on our platform, they can use the symbol as gold 10G. It is a monthly contract, so you will be having 12 contracts at one point of time, and the contract will commence on first day of the month, and the contract will end at last day of the month, depending the last day is a working day. If in case it's a holiday, then the last day of the contract or the expiry of the contract will be the preceding working day of the month. Further, the trading period of this contract would be from Monday to Friday. Those are the working days. Trading session of gold 10 gram futures. The futures will start at 9 a.m. in the morning and it will end at 11:30 in the evening or 11:55 in the evening based on US daylight saving time period. Trading unit, quotation unit, and the delivery unit is same. That is 10 grams. So if you trade one lot of gold 10 grams, the trading unit will be 10 grams of gold that you are trading. The quotation would be 10 grams. So you will see the prices as 1,60,000 or 1,50,000, whatever is the 10-gram price. You can see the base value of that on the screen. The delivery unit, if you are assigned delivery or if you want to assign delivery, the delivery unit is of 10 grams. So if you are buyer of gold contract, the delivery will be assigned to you will be in multiples of 10 grams. So if you have 10 contracts that you are assigned, then you will get 10 coins of 10 gram each. It will be ex Ahmedabad contract. So if you want to give delivery or take delivery, the location from where it will happen is Ahmedabad. So as I mentioned earlier, the delivery center designated clearinghouse facility will be at Ahmedabad. I'll run through the margin and settlement again. So all open position on the expiry will be marked for delivery. Delivery is compulsory. Delivery paying will happen on T+1 basis by 11 a.m. except Saturdays and Sundays and trading holidays. The final settlement price will be the Ahmedabad spot price, which we calculate on daily basis, and those prices are of 9 and 5 purity. These prices will be converted into 111 purity on the final expiry day of the contract, which will be the final settlement price of the contract. Staggered delivery period of the contract will be last 3 working days. So as I mentioned earlier, if 30th is the expiry day of the contract, so 28th, 29th, and 30th would be the staggered delivery period of the contract. Delivery logic is compulsory. We have different types of margins. So we have initial margin based on volatility. Then we have special margin. Again, it is based on volatility. If the volatility is higher, then additional margin will be charged on the outstanding position. And further, we have delivery period margin that is on the last day or the staggered delivery period. That the delivery period margin will be charged to the buyer or the seller of the contract.
Thanks, Milind. So still, I guess under the Q&A tab, we have not received any further queries as of now. So I would request all the participants in case later on you are having any queries related to bullion offerings and especially for the gold 10 gram futures contract, which we are going to launch as a new product, you can reach to our regional team, regional relationship managers as well. And parallelly, in case related to trading, you have any issue or queries, you can write us to msm@nsc.co.in, or alternatively you can call on our help desk number as well, which is 1-800-266-0050, and then you can share your related queries. So definitely we'll be happy to help, and we'll be looking forward for all the market participants to keep tracking the gold 10 gram futures, for which the symbol would be Millen gold 10G. Am I correct?
Yeah, yeah, absolutely. Gold 10G.
Great. So participants keep tracking that, keep exploring the products which are existing products as well as the new products like gold 10 gram futures that we are going to launch. And today's session again was just to make all of you aware about various offerings which we hope that we were able to do. Milind, before we sign off for today's session, any concluding remarks or collation of your explanation that you want to do?
Absolutely. So, as I mentioned earlier as well, so NSE is offering multiple products for so we started from ETF to gold derivatives, and under gold derivatives, we are launching one new contract, which is gold 10 grams contract. We have seen, I mean, we have spoken to multiple market participants, and they are very excited about this contract, and we might see a very good traction. So we would like the participants who are into this call to see get into the contract, and if they can hedge or if they can mitigate their risk, if they are into jewelry business or they are into any other bullion business, they can use this contract to mitigate their risk. And if they want to diversify their portfolio, they can use this contract for getting a 10 grams coin, which is quality assured, and the delivery and settlement will be very smooth. And then further, we talked about electronic gold receipts. So this is one of the key, what do you call it, segment, which we propose to launch in future, and it will be kind of a spot exchange. So we might see a very good traction in that as well. So we will definitely inform or educate our participants on electronic gold receipts in the future as well. So you will have a multiple way of investing in gold, and a multiple way of diversifying your portfolio from equity to debt, and now to commodities.
Great, great. Thank you very much, Milind, to share the insights and all the knowledge related to offerings. And on
Thank
behalf of
you.
NSE and Milind, I again thank you all the participants who could join today's session. Please keep on passing the information, important information, to all your colleagues on in different broking outfit as well, so that we can reach out to maximum number of participants in terms of what we wanted to convey. We'll be again available with more and more open house sessions in coming time. So for today, this was all of it. Thank you, Milind, again. And
Thank
participants,
you.
have a
Thank you.
great weekend coming ahead. Thank you.
Thank you, Jwalan. Thank you all.